All right, Bang Bang. Today is Tuesday. It's September 21st. Welcome to the Dog Walk presented by Barstool Sports. As always, on Tuesdays, I'm joined by Chief on the couch. Now, we're settled in here. We got the your new spot. How are you enjoying it?
I like it.
Yeah.
You saying we got Chief on the couch means sounds like I'm coming in for therapy. So,
Well,
I don't know if you're trying to get something across, but yeah, it feels good over here. I'm comfortable now. We got my little table so I can read my notes. I feel good.
there you go. And we have quite the topic for you. I was stunned when you told me what it was.
Yeah, it was. I got a very genuine whoa out of you.
Yeah, because I don't think, I didn't see this coming. And if you listen to the show for a while and you don't follow, trends and what could possibly come in the horizon and everything,
Yeah.
you didn't see this coming either. I could promise you that. But
Fuck no. But I don't really study the Chinese economy very often, and that's kind of where we are today. So we've talked about China's in the news a lot, and we talked about how they had the flooding and the what was the name of the dam? Do you remember?
Three Gorges Dam. We
Yep.
talked about the Road Belt Initiative. We've
Yep.
gotten to so much, and it's just rise. So to hear down is kind of jarring. Oh, I guess Gorges Dam is obviously like a doomsday scenario type thing, but
Yep.
still, it's always something big. But
Well, they do things big there. in
yes,
China.
yeah.
And then and they're like a newer kind of form of government, right? Like they're trying to set up their economy, and they do things differently than we do here, but they're running into issues that are very similar to what we saw domestically here in 2008 with potential housing asset bubble, and they have a company that's similar to Lehman Brothers that is insolvent. And the government, even though everything's technically owned by the government's saying that they're not coming in to bail them out. So it's holy shit, and it's having ripple effects across the Chinese and Asian markets. And the worry is that it will bleed everywhere.
Wow.
So,
Well, before we get going there, I'm very interested to hear about it, but I want to talk to you guys about lasting longer in bed first and foremost.
I mean, when in doubt, just got to build things that last forever, last strong. This helps you last forever.
Big time. So stop using, the old ways of thinking about baseball, saying the Pledge of Allegiance in your head, or counting backwards from 10, because Roman is here, and the Roman swipes are a clinically proven way to last longer in bed. So they're effective, they're easy to use, and they're fast acting, but they don't require a prescription. They can ship to you in small, discreet, unmarked packaging. Each swipe packet is small enough to hide in your wallet whenever you need it. They're super easy to use. Just take the swipe out of the packet, swipe it on, let it dry. You're good to go. That's it. Go to GetRoman.com/walk, and you can get your first month of swipes for just $5 when you choose a monthly plan. That's GetRoman.com/walk. Go hop in on it, guys. You got nothing to lose.
Yeah, I mean, you'd be stupid not to do it at this
You
point.
really would be. So, once again, that's GetRoman.com/walk. Go get some Roman, support Roman, and, up your sex game.
And, it is what the kids call cuffing season. It's right around the corner.
True.
You find some nice young lady to hold on to through the winter. Give her another reason to hold on to it. Grab these Roman swipes, last longer, hold her all the way maybe through Valentine's Day.
Very true.
There you go.
Very true. All right, Chief. So where are we starting with this one?
I mean, it's the name of the company is called Evergrand, okay? And it's spelled, it looks like it's almost like a French word. So when I saw it trending, I was like, oh, I wonder what this is about. Oh, it's actually not a French company or it's a Chinese company. And they, like I said, they're having to pay back some of this debt, and they've announced that they just can't do it. To the tune of $305 billion is what they're reportedly set to default on. So that's how much money they owe. And it's like, how the fuck could this happen? I mean, and it sounds like it's, like I said earlier, it sounds very similar to the Lehman Brothers situation, but there's some stark differences because Lehman's really a bank. Evergrand is not. They're a housing development company. But in China, the way things work over there is that, and again, I want to emphasize how big this company is. They have 200,000 employees that they employ directly, and their work where they're building these different housing developments employs an estimated 4 million people. So if you're a copper miner, you're a contractor, you're this, you're that, So they have their 200,000 employees that get their checks from Evergrand, and then they have another 4 million people who rely on the subsequent businesses around Evergrand for their income. So it's a huge company with massive reach all across China, and they're in big trouble. And we're seeing it hasn't gotten like national media because we got a lot of stuff going on here. But it should, because it could have ripple effects across the world. And we're even seeing like average Chinese citizens rise up and show up at their doors in numbers to protest them, because the Chinese citizen is getting fucked on this badly. So there's like a lot of unrest. The Chinese government's worried. Asian markets are worried. Every day that goes by, it sounds more and more like there's going to be like a housing bubble set to burst, and it's all going to be around this Evergrande the same way it was all around Lehman Brothers.
Oh, dude, I feel like the more and more this goes on, like I said, just talking about the dam and talking about the Road Belt Initiative, the more and more we talk, the more and more I learn. Like we have such a close tie to them that everything affects us.
Everything does, and we'll get into some of the differences about how it might be more contained globally in China. If they do have this big housing bubble actually burst, if the government can't save it, versus the United States. It kind of relates back to that what the fuck happened in 1971, where we became the reserve currency. So because we're the reserve currency, we're much more interconnected on a global scale with Europe and other places than China is. And China is still, kind of by design, is more insular, at least on the housing market side, than we are. So it's because we had those mortgage-backed securities. This is kind of contained to just these housing development companies. But we're talking like they have 1.5 million properties that are about to go, not dollars, 1.5 million properties that are about to go like bust, and people are about to lose their life savings about it. Wow. So that is a thing that is a little bit different, that over in China, the average person, the only thing that they invest in is real estate. Okay, they don't have stocks and bonds and things like that. They don't give their kids savings bonds because they've been like this, communist country for forever. So they don't have the free market type of investing among the average population that we do here. So it's really contained to people who just want to buy a home and a place to live, and it's just the housing market that people are really invested in over there. But it's not just people. It's not just like, hey, Eddie, like you're gonna buy a house in the next year. I'm trying to buy a house, whatever. This is like because people have been so poor there for so long. It's not only their own life savings that go towards a down payment on one of these properties. It's also their parents and their grandparents. It's like this multi-generational pool of people putting their money together, put a down payment on one of these apartments that is being built by this Evergrande. And that's one of those distinctions that I want to make clear, is that it is not a Lehman Brothers bank situation like we saw here in 2008.
Can you quickly explain that? Just because I feel...
Right. So like Lehman Brothers, they would, in the housing bubble, right? So they were giving out loans to... I shouldn't say that. So you have these mortgage brokers, right? And if we talk about The Big Short here, and we used to do it on the radio show all the time, The Big Short, they would talk about, okay, like we have these people, everybody wants a home. Everybody wants a home. They lowered the rates. They lowered the standards. When our parents were trying to buy a house for the first time, you had to put 20% down. And that just went away. They called them those ninja loans. Okay. The ninja loans stood for like no income, no verification, no job. Just give them a fucking loan, let them get a house. And then it didn't matter because the mortgage company who was issuing that individual buyer the loan, as soon as that thing was signed, sealed, delivered, they would, and it's like that famous scene with the douchebags in The Big Short. Like, I sell a loan, there's no verification. This person's like a poor immigrant, doesn't understand what they're signing. They have no business getting this house, or they're the stripper who has 5 houses, like all the different things. They don't care because they know that they can take that mortgage that they just lent to to this person and get the liabilities off their books and sell it to a bigger bank like Lehman, Bank of America, whoever, and they sell it for a fee. And they want that mortgage. The big banks want that mortgage because they can bundle it with a bunch of other ones, slap a credit rating on there, and that becomes a bond. It's a mortgage bond. So that's kind of one of the big differences is that nobody in China even is allowed to own their own property. Okay, so I was like, wait a second, how is that possible? So these companies, Evergrand and other housing companies over in China, they lease the land from the Chinese government for a fixed period of time, and it's usually about 70 years. Okay, so then after 70 years, they have to do something else, or it just goes back to the government. So they say, hey, government of China, we want to buy this piece of land off you. They charge them a price, and they usually pay above market value to make sure that they get it. And the Chinese government says, oh, thank you very much. You can now build your housing complex on there, and then they can sell the individual units inside the housing complex to individual citizens. That's kind of how it works in China. So but like I said, it's never actually owned. And then Evergrand designs these buildings because now you think about China, it has this growing economy, growing population. People actually there's some kind of stat over there where it's like 75,000 people are raised out of abject poverty every day. It's like, what? Yeah, okay. So the whole economy in the last 50 years has been growing, like you said earlier. So now these people are like, they're not wealthy by any means, but they're able through like working and saving and pooling their money with their family to be able to put a down payment on one of these designs in an apartment complex from Evergrand. So Evergrand takes that money in and they say, hey, that's a down payment. We'll let you know when your apartment complex is finished because it's just not even built yet. But people like the market has been so hot that people will just say, hey, we'll get our building from Evergrand, which is not a bank. It's a housing development company. Evergrand takes that money, which you would think would go towards the construction of that complex, but they weren't using it that way because the fastest way to grow is to get more money and more leases and more land, more land leases from the government, build more buildings and keep the money flowing in. Yeah. So like I said, they took all this money in, and then instead of putting that directly into the construction material to build the house or build the complex, they would say, hey, here's our collateral to other lenders. Give us more money. See, we already have these sold. Give us more money on top of that as a loan, and we'll go back and buy more leases and build more developments and just keep doing this cycle over and over and over. And that strategy was actually working. It's what allowed Evergrand it's not like some age-old company, like not too many things are in China, but it had been around since it was founded in 1996. And by 2020, it's like a Fortune 500 company. It's a major company on the world stage and in China, like huge money coming in.
Hey, let's take one more break here because we got to talk about JP Graziano's, and I have some big news regarding JP Graziano's. And that news is, are you ready for it?
I'm ready.
They are now open inside again.
Oh, yes. That's a good news. I didn't know that.
Yep, they're open inside starting today. So if you're listening now, it's probably 11 o'clock noon. I don't know when I'm going to drop this podcast yet, but JP's will be there, and you can go inside, order your sub. The window is going to be closed, so you got to go back in to order it, but the night window will be there. They'll open it back open. So it's going to be great. You can go see that awesome little cash register area that I love. It reminds me of Christopher Moltisanti's office.
Okay, that's a perfect analogy.
Yes, that Mrs. G takes care of all the transactions in. So go in there. You'll be able to eat a sub in there, and back to business. And then they also have a big collab coming up September 30th. So keep your eyes out. They're going to put the thing on sale on the 23rd, this Thursday.
Coming up.
And those go fast. And I can't tell you how many times they get people, whether it be the meatball with Monteverde, whether it be, with coal fire, the beef, once it's gone, it's hard to get back.
Let me tell you something. If I had missed that Monteverde collab with the meatball sub, my life would be worse. That sub is one of the best things I've ever had to eat. Great. And so everything he does on these collabs is a home run. So if he's got one coming, just count me as a guy who's in line to get one. Yeah, so keep your eyes peeled. Make sure you're ready there because I don't know what it is yet, but it's going to be good. I can guarantee it. And as always, go to tasterealchicago.com, get a beef kit. Once again, JP Graziano's back open indoors. Big collab pre-sale starting Thursday. tasterealchicago.com.
get a beef kit. Easy as that. All right, let's hop back into the show.
Whoosh. So like that formula had been working, right? So they're more money, because you always need money coming in to be able to do this process. So the more you build, the more people want to put investments. They put these down payments. You take that money, you get more collateral, you build more apartment complexes. The problem was in August 2020, the Chinese government put a new law in that limited the amount of debt that they could take on. These housing companies could take on. Evergrand's the first to get really squeezed by this, but not the only one. And then they also limited how you could use that money. So now it's like, oh, fuck. We don't have just the free reign to take on more debt, more and more debt, and build more and more things. We actually have to sell these physical assets to kind of make our buck and be able to pay our debt. And so they started holding on to some assets a little bit longer to show that they had these things on their books. And then they would lower the prices of the individual units to the Chinese people, trying to be like, they have smaller profits, but at least they weren't getting screwed on some of their interest payments and their debt and all this and that. It wasn't continuing to build up. So if they lower the price, you create more people that can afford it, and that's just a way to sell some of these empty units. That caught up to them though, because then the market reacted, was like, well, if I just wait, the prices will just keep continuing to drop, and they have, because they're so desperate to get some of these things off their books. So then it becomes, well, now we can't pay the interest on our debt. Now we can't build anything more. Now we're just in this place where we're stuck. We can't even finish the properties that we've started building. So you have all these buildings all over the place, these different metropolitan Chinese cities that are just half finished, because Evergrand, the company who's in charge of building them, can't afford to finish them. And then you have these people who have given their life savings to this company to put a down payment on this unit that they were promised. They can't get it back. They can't get the money back. They have no place to live. And there's 1.5 million of those properties, as I said earlier. So 1.5 million families in China that have given all their money to this company and have no means to get back, and they're just out of their money, and there's no place to live. So they're continuing to rent in these other places, and they just have no way to get it back. So that's where all the protests are coming, and everyone's like, oh, China, the Chinese government, the CCP, Chinese Communist Party will bail them out. They're saying that they're not going to. So they're saying that hey, we need to be bailed out the way that we bailed out several banks in America in 2008. And the Chinese government is saying hey, I don't think we're going to do that. So now there's a real panic.
It's a problem.
It's a real problem. Wow. So they can't meet because of these different changes in the market and in the laws. There's no way for them to catch up to this balloon of debt and interest payments. So you're talking about a Fortune 500 company that is set to just go completely bankrupt. And there's just no the government now, as of today, we're recording this Monday morning, they're saying that Evergrand is trying to get more and more creative as ways to come up with these debt obligations. So they say that $300 billion, like I said, and they've asked their employees to start to provide short-term loans to the company. That's how desperate things are. And they call it, they're going to have high interest investments to ensure that they get these things done. But they're like, hey, don't take your bonus. You can keep your job. We'll keep your bonus, and we'll try to pay off the debt that way. And they did that, and several many of their employees took that option, and now they're getting fucked because they know they're never going to get their money back. So the company just keeps falling behind over and over and over, and they have through this system. They have an outstanding $7.4 billion of bond payments that are due in 2022. So they have the $300 billion out there right now to as many as 128 different banks and other non-bank lenders, and they just have no way to finish it. So what they're looking at is bankruptcy, restructuring by the government. So everybody's a C-level person is going to get whacked out. the people who have put their money in, there's no guarantees that even with a restructuring or a bankruptcy deal that they're going to be able to get their life savings back or have their apartment complex finished. You have all these unfinished buildings all over the place. You have the Chinese economy is getting hit all over the place. So that part of it is very similar to like that. And like I would say that mortgage-backed security cycle where it's like you lend more to create more, to drum up more interest. The interest dries up. Now the properties are worth less than what you sold them for. So you have this debt with no way to pay it. And it's just this vicious cycle that's almost like a boa constrictor. Like it just keeps getting bigger, but also just like squeezing the lender, which would be at this point, or the bank, which would in China, it would be like Evergrand. And what I read was that it's kind of like a housing bubble and a financial bubble rolled into one, because the only thing people invest in is housing. So it is like the financial sector, but it's not. And it is like just housing, but it's also this. So you have like speculators involved, like you're not betting against a bank like we saw necessarily in The Big Short, but it's also like just you're betting against this housing company.
Really? So they can't fucking invest in like a bunch of KFC franchises or something? Like there's no,
over there?
Yeah, I don't know how that works. Like they can't like
they can't own the land. You might be able to own a business, but you cannot own the land. The government owns the land.
So as far as property goes,
right? So it's like you buy your house, you pay property taxes.
Yeah.
But you own like your acre, your half acre, whatever your house is built on. You own that. That's not the case in China. You're leasing it from the government.
Yeah, you're not fucking owning strip malls and just collecting money on 8 stores that are in there. Correct.
Okay. So you can have a business.
Okay. That makes more sense then.
Yeah.
Man, I mean, there's no way without a bailout, right?
That's what it looks like. And it's going to play out in public. It's still like an ongoing situation. But at this point, like China's in a tough spot. Like they can act quickly. They can bail people out. And then have like financial excess and like print more money, which is something that we've done, or they can just fail and let it collapse and then have to deal with like the ripple effect throughout the entire company. And we've seen there's another company called HK Equity, who's another like housing development company. Their HK stands for Hong Kong, but they do a shit ton of business in China because it's part of China. They're down 87% on the market today.
Holy fuck.
Today. Okay. And like I said earlier, like if you're there's this company called Rio Tinto Mining. Okay. Rio Tinto Mining, they do a lot of copper, stuff like that. They mine it and produce copper wiring. They're taking a fucking beating. So like all these companies that if you're tangentially connected to the housing, so you're a commodity, you're timber, you're a cement mixing company, you're a contracting company, you make drywall, whatever it is, and you had contracts in place to do these housing developments, but there's no way now. So you have all your plan, you paid your team, you're doing this. Now there's no way for you to get paid on that thing that you've already started because they're just stopping building because they can't do it. So now it's like, holy shit, like who else is doing this? So now other housing companies are looking at this too. And then, like I said earlier, one of the ways that they combat this is by lowering the prices. So lowering the prices is good to a degree, but eventually like the supply outweighs the demand. And then that's when everything really, really crumbles down. So, and that's what we saw here is because if you have all your investments are tied into one thing, your house, which a lot of people, not just in China, a lot of people here are the same way. And you paid $500,000, I'm making up numbers for your house. And then something happens and it's all been a bubble. And now your house is worth $280,000. You're fucked. Like, so it's a big problem. And we saw what happened here in the housing market in 2008, where it had ripple effects. Again, it should be more insular, or it should be more contained because China is more insular. They just kind of keep everything to themselves, but it is going to have impact on the commodities market and who knows what else. And if so if we're trading with them, and they're unable, and their economy is so shot that they're buying less from us because they have less of a market for it, then that's a real problem too. So it is going to have these kind of more global financial impacts, probably not to the degree that what happened with us in 2008 because we're the world's reserve currency and they're not. and their policies keep everything. China's still in a lot of ways still more closed than the West, but it's a real problem for them internally, and they're also they have a lot of problems domestically over there, right? So you have all the Hong Kong problems, you have the Muslim detention camps, we'll call them. You have all this kind of unrest around a lot of different things. And now it's like you start impacting people's money and their bottom line, and they're homeless, and they lost their life savings. The government's not doing anything about it. That's when, so now the government's like, holy fuck, like if this really, the thing that has kept the Chinese Communist Party in power through all the last, since Richard Nixon opened up China in the 70s, was that, like I said earlier, so many people are getting out of poverty in China, like at a staggering rate. Well, if they backslide because of government policy, then people start to say, like, why do we even have this government in power?
Start to question things.
Right. So they're worried. The Chinese government is supposedly worried on multiple levels of the ramifications of this thing. We don't know how it's gonna play out.
Damn, dude, there's so many people that are gonna get fucked.
Crazy.
That's
crazy.
Horrible. It's like a Madoff meets fucking
right.
Yeah.
And it's
housing
like
crisis meets it's like a bunch of things mixed here. It's bad.
All of it. Yeah. It could be very bad. And it's also one of those things where it's like you're like fucking China. Like, of course, but then it's like that's at the government level. Like Americans have issues with China at a governmental issue. I don't care about the Chinese people on the street. Like, you want them to be able to do well and keep their savings and things like that. So it feels like doesn't matter where you are, everyone just kind of gets grounded down by this by the big wheel. And this is a problem. So it's Evergrande. This situation, it does pose this systemic risk to the rest of the economy. They've got deep ties to financial institutions all across, like that consumer class. So like that's what they really need to keep propped up, is that consumer class to keep buying goods to keep the economy going. But if they've lost everything, they can't do that. Yeah. So it'll be interesting to see how China reacts to this situation, because they've been very slow to say that we're going to bail them out.
Yeah. I don't know, like, how did this company not? I mean, I just don't. Unless if this is something they couldn't have foreseen, like, how do you like that? But the people spotted the flaw, right? With waiting.
Right, the average, because it's like, well, every month, because they're recognizing the flaws in this company. It's like, well, if I wait another month, I might get it for $25,000 less. I might get it for $40,000 less. And wait another month. Another month. In a weird roundabout way, it almost reminds me of like the GameStop shit. It's like, hey, if we fucking jump on it, pounce all enough, right? Like, we could beat the shorters, And it's like, holy shit, right?
If someone's gonna beat the system for their gain, I mean, it's not even beating the system. It's just being smarter about it, right?
And that's right, but then it's like you beat it too much in a way, because then it cripples the whole economy, and you feel it. You think you're winning here, but you're losing over there, and it's because it keeps like spiraling, kind of. And it's like this whole game by Evergrande only works. It's only predicated if more money from the Chinese citizen comes in. So once they recognize that they became like the shorters, like, I'll just wait because I know it's going down. I know it's going down. I'll wait at diamond hands. Okay. And then diamond hands, and then you're fucked. So then you're like King Midas, where it's like, well, now they're in trouble. So it'll be interesting to see how it plays out, but you never really hear about Chinese economic problems, because it's been nothing but historic growth for the last, certainly since the 90s. And now it's like these policies are coming home to roost a little bit.
Yeah, man. I don't know. We'll see what happens, I guess. I mean, that's something that's going to be, I didn't hear about it yet, but if this continues, and there's going to be a big decision, a lot more people are going to know about this sooner or later. Yeah.
And then there's one other like China thing in the news too. Did you hear about this thing, the France and Australia, the nuclear subs?
No. Oh, yes, I have.
And so Australia is like, we need nuclear subs to keep our ports safe from China. So it's like China has this economic problem, and if you look historically, when countries get desperate, that's when they get aggressive militarily. Maybe in the last 100 years, like there is like Germany, certainly in World War II. That was a factor, that they had such economic hardship that they wanted to grow and expand and revitalize their economy. Well, I think that's part of maybe Australia is looking at the global scene here and being like, fuck, like this is a problem.
Yeah.
France is pissed off about that deal. Like there's going to be a lot. This will be an interesting year for China because a lot of people are kind of predicting that they're going to slow things down and have a hard time.
Well, we'll see, man. We'll see. All right, Chief, thank you. That's it for today, everybody. Thank you for listening. We'll be back tomorrow. We'll see you then.